Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Alpaca, Yoshi Yokokawa. Great to see you again.
Great to see you again. Great to be here.
All right, so thanks for joining us. Look, before we get cracking, though, we are going to learn a little bit more about Alpaca. So, Yoshi, I think if I understand, you're kind of a back-end brokerage providing trading infrastructure for other apps and institutions, a kind of white label Robin Hood, if you like. Is that a fair description?
Yeah, I would say that, we're brokerage infrastructure for a bunch of modern fintech applications. Yeah, it is true. Like Robinhood is doing an amazing job, and each countries need their versions of Robinhood's applications for their end customers. So we support them.
Okay, and how is business these days? Maybe you can give us a sense of growth and the size of the company in terms of revenues, profits, clients, geographies, and the like.
Yeah, so we've been growing super well. We just closed our $150 million Series D beginning of actually end of last year. We hit the unicorn status as well. Our revenue has been growing more than 2x year over year last few years. So, I missed the when we were at the Paris Fintech Forum right before pandemic, but the growth has been phenomenal after that.
Okay, and you mentioned your $150 million, I think it was Series D fundraising round, valuing Alpaca, as you say, over $1 billion. I think it was $1.15 billion. You've obviously come a long way from your roots as a database and machine learning company. Armed with all that cash, what's next for Alpaca?
Yeah, so we're having a lot of growth and success seeing all over the world. We recently acquired clearing broker-dealer in the UK and the Europe. And then also we acquired one India as well. So we, of course, are licensed already, anchored in the United States, and then also have licenses in Japan, Bahamas. But for us now, we're expanding more into the global regional places to make sure that we can support the global brokerage partners and then applications that are expanding not only the one region, but the multiple regions in the globe.
So first on the list would be where?
So we're working on several North American countries as well as the Asian countries as well, and of course, the Europe is a very big place. Having the one country broker dealer doesn't get to everywhere, so we have to work on more localization, tax wrappers and all those things. So we're extremely committed to make sure that we are the first choice brokerage and custodian infrastructure in the Europe as well. So yeah, that's a license-wise, and we're launching a bunch of the different product sets, like global stocks, including European, UK stocks, and all those things.
You mentioned stocks. Obviously, you deal with stocks, you deal with ETFs, and you deal with crypto. I think perhaps crypto used to be more of a bigger thing for you, or more of a focus. It's had a pretty tough 2026 so far. That, of course, could change within the next few hours by the time this goes out. Has that had an adverse impact on Alpaca, or is all kinds of volatility, whether it's up or down, are good for you?
Yeah, so we see both ways, right? I think as a clearing broker, we think about the businesses that's coming from assets that's continue to accumulate. Of course, that's good when the rates are low because the assets continue to come in. And when there's a volatility, usually instead of assets growth, trading volume continue to grow. So we make money from that too. I feel us, we are always good in both of the environment. So when the market volatility like this, usually people trade more. So it's good for us as well.
Okay, now I know, I think you told me last time we spoke, which was a few years ago, but having lived in Peru, I am particularly fond of alpacas. Can you remind our audience why you are called Alpaca?
Sure. Our business, we're Silicon Valley based, tech company, while extremely regulated financial services company. Tech and financial services, both of them are very much number oriented, very logical. So we thought it was pretty boring to put something around that. So we decided to put something that's completely opposite. That happens to be alpacas.
Okay, and who doesn't love alpacas? Anyway,
Exactly.
So we've heard about Alpaca, the company, not the cousin of the camel. Let's now learn more about Yoshi. So, Yoshi, you founded Alpaca in 2015, I think, but I appreciate you had a life before that. I think you were born and raised in Japan. Tell us a bit more about that and how you ended up where you are right now.
Sure. I was born and grew up in Japan, and then I ended up starting working at Lehman Brothers before financial crisis. So I think that taught me a lot in terms of the how much work that we how hard we have to work to be successful, and then also how everything is extremely fragile, especially even when you're big financial institutions. And then, I did some day trading, and I, co-founded a couple of the machine learning companies, which allowed me to understand more of the, technical side, and how, those deep tech and then advanced technology can allow us to do a lot more things. But also, I learned a lot of limitation of the technology as well. So I think it allowed us to really understand what's important is really product market fit, where the demands are.
Right. You mentioned Lehman Brothers there kind of in passing, but it's important to note that I know, of course, you didn't cause the global financial crisis single-handedly, but I mean, you were there kind of at the coalface, if you like, kind of witnessing kind of Lehman's meltdown. You were part of the securitization team there, I think. Do you feel, I mean, if it's not a silly question, did you feel kind of responsibility at all for kind of being part of at least that time and kind of what happened? I mean, and how did it impact your life, and what did you learn aside from that some things that don't seem fragile one minute can be very, very fragile the next?
I think that's an amazing question. I feel like that, as the individual that was a part of the organization and part of the whole industry that's working on some prime mortgages and all those securitization. Of course, I was a part of pushing and putting more leverage into the whole financial system, and that caused the bubble, and the bubble burst, and that created a lot of tragedies. So of course, I'm a part of the responsibility that created that situation, and that's one thing. At the same time, I also learned, and I'm feeling more about this, is that there's so much thing that's happened in the world that's out of the individuals or people's control. If you think about how the macro trend works, how the volatility of the market works, I feel like it's out of the control, but I feel like it's already patterned. Like if you think about rate values, short-term debt cycle of 10 years, long-term debt cycles of 80 to 100 years, that's connected to human life. And then war happens, tsunami happens, it happens at the very similar pattern. So I feel that more of the global macro patterning into our situation. So I think if you talk about Bitcoin volatility right now, even though that is the case, I feel there's always a trend that if you step back a little bit, we see that, and it's so hard to kind of control our emotions, not to be reacting into what's happening in front of our eyes. But I think that everyone involved at the subprime bubble, I think people knew that that was going to happen, but the reality is that there is no one that you are able to stop yourself from, because otherwise you're going to be also get eating up by other competitors as well. So there's a pattern and the logic why that happened.
Right. It sounds that perhaps if you'd have pursued your first career ambition, I think, which was to become a doctor, that maybe life would have been a bit simpler.
Yes, all my family members are doctors, so it is a very different life. But yeah, it's all about curiosity about how to treat something, or curiosity about how the world works.
Okay, so we've heard about Yoshi, but a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we are going to continue our conversation with the co-founder and CEO of Alpaca, Yoshi Yokokawa. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so now Yoshi, let's talk about the future of finance. So Yoshi, fintech seems to be more or less back in favor with investors. I think one can say, as we've seen IPOs from the likes of Klarna and eToro. We've seen big fundraising rounds like we did with Alpaca itself. How do you see the IPO and fundraising market evolving for fintechs in 2026 and beyond?
Fundraising, it's so hard to forecast what's going to happen, because I think one thing just creates different narrative. But how I see it is that there are few topics that everyone's excited about. I think it goes back to a little bit of the bigger trend. Which is, of course, those stable coins. Of course, AI is everywhere. And then tokenization. I think people are all excited about, bringing things on chain in terms of the assets, in terms of the financial operations as a system, as a whole. So I believe that mega trend continues to stay. But definitely, there's a lot of volatility that, we're seeing in the crypto and, tech sector in the stock market.
Okay, well, I want to come back to AI and stablecoins and tokenization in just a minute, but staying on the theme of fintechs and whether they are, back in favor again. I mean, we saw fintech and finance mergers pick up speed in 2025 as companies sought scale. Do you expect there to be more big buyouts among kind of trading apps and digital banks and even larger banks and financial institutions in 2026?
I think so. The trend definitely I see is that during the the early 2020s and then later 2010s, we saw a lot of B2C consumer-facing applications merged. And the ones that's still surviving, they're the ones who are winning. And if you're already existing right now, you probably figured out how to scale, which means that when you're scaling, it's now about just getting bigger and bigger every year, which means that you have extra cash and you can even grow faster if you are able to suck up other companies, which means that I think winner will be even more obvious, and then they're going to continue to grow in a massive scale. So I think that 2026 will have the kind of similar trend that we saw in 2025.
And smaller fintechs, is there still room for them to kind of thrive and grow, or is it going to be they're going to have their work cut out to avoid being gobbled up by someone much bigger?
I think there are two areas that those smaller players or emerging players can thrive. One thing is that that's our also bread and butter. In the world, there's 195 countries. So each country has a different regulatory framework and then different type of the cultures and people. So it's extremely hard for the bigger scaled players to be able to localize themselves to be optimized for the demands. So those countries and nation and certain segments, I still see a lot of opportunities that exist for the emerging players. So that's one thing. And second thing is the emerging technology and segments, especially stablecoin related. Also this whole shift of the moving financial system on chain, which is more through tokenization. Bigger players not easy to put themselves into, adjust it to the new system, the on-chain connectivity, stablecoin funding, and all those things. So making sure that making those emerging players to be available for those things, I think there's definitely opportunities there.
And now onto artificial intelligence, which you've mentioned. Obviously, it's impossible to have a conversation with anyone in any kind of tech area without discussing AI. I mean, we've seen in terms of AI investments in finance, everything from trading algorithms to risk models, investment has been skyrocketing. We've seen massive spend on data centers and the like. Is this kind of spending that we're seeing? I mean, never mind the hundreds of billions that big tech is spending right now, but is this kind of investment boom that we're seeing right now, is that sustainable or is that just a bubble that's going to burst at any minute?
I think any industry, any trend, there's a bubble up and down. So if people are thinking that it's a bubble, probably it's a bubble, and then at some point it's going to pop. But we also have to look at the fundamentals, and then a revenue multiple is not that crazy compared to the tech bubble that we saw at the late 1990s and early 2000s. So there's definitely trend that may be bubblish, but we don't know that if it's really truly bubble like we saw in the IT bubble.
And earlier this year, we saw many software and data companies, including in the finance space, being sold off for fear of being disrupted out of existence pretty much by the likes of Anthropic and OpenAI and other big AI firms. Are those kind of fears justified?
I think the reality when the companies scale at a certain stage and then be a public companies for a long time, I think it is true that they may have too much resources of the expense in terms of the headcounts and the things that they may not have to be doing, but they kind of have to because of the PR perspective and everything. So I think in my personal humble opinion, AI could have been the certain justification of the actions that they're taking. So maybe the stock prices may be tanking, but the fundamentals of their companies may be actually getting better because they now have reasons to be able to do what they wanted to do to strengthen their company for the future. So I think we got to continue to see what's going to happen 6 months, 12 months, 18 months. And then I feel we'll see the real outcome of this whole AI disrupting the existing industries.
So there is hope for other companies that specialize in particular areas, whether it's with data or software. There is still hope for them. It's not that everything is just going to be eaten up by these big AI companies.
I believe so. I think there are a lot of industry specific actions and know-hows and knowledges that has to be there. We use so much AI. We of course do very much because that's what Hitoshi and I had been doing, the building the computer vision AIs and deep neural nets. That's our core origin of what we do. But the reality is there's so much stuff that last mile everything. We still have to do multiple things in the human stuff, and that some of them are requirement by the regulator. Some of them are actually to make sure that things are working correctly. And of course, that's going to get better and better. But that we have to really think about the speed of the change where the regulation allow us to do that or not. And then also the speed of the technology advancement that will actually catch up to the level that regulator would say that it's okay to do so. So I think it's a matter of speed, but I don't think that happens tomorrow, right?
And do you think regulators are kind of asleep on the job right now, that they need to be more proactive and better aware of the kind of challenges and opportunities that artificial intelligence is bringing right now?
I think there, of course, each of the country has different regulators, and then I cannot talk about every single country's regulators. But in my opinion,
I guess you need to be nice to them as well, a bit, kind of.
Exactly, and then we do talk with a lot of conversations with the regulators. For example, Europe and Japan and the US especially, they are extremely aware of these emerging technology, including AI, including stablecoins, including tokenization. They're actually very proactive, trying to understand what's happening. So I feel that things are going to the definitely good direction. They are not trying to reject everything. They're trying to embrace and understand, and I think that's the first step, in my opinion.
Now we talked about tokenization, crypto, and the like. I mean, just kind of more broadly in terms of I suppose as an investment prospect. I mean, we seem to be in a deep crypto winter once more right now. Is this going to be kind of short and sharp, or is this something that's going to be prolonged, do you think?
We just all we can do is to look back on what happened in the history, and then expect that history will rhyme instead of the repeats. So I cannot talk about the future, but this is the time that we look back what happened in history, and then step back a little bit. What is a mega trend, and then don't get falsified with what we're seeing right now in front of our eyes.
But what about the disclaimer that past performance is no indication of future performance that presumably all of your clients have to put on their apps and the like?
Yeah, that is exactly the thing. So we won't know anything about the future, but the only thing is we learn from the history, and then we supposedly expect that it could rhyme.
Okay, well, so look, I mean, staying on the subject, countries worldwide have been testing digital currencies, but private ones like stablecoins in particular have been racing ahead in terms of their adoption and in terms of the excitement that they're generating. Do you think that governments, aside from China's presumably, are going to be embracing CBDCs at scale anytime soon, or is it going to be a very long process?
This is a really interesting question to me because I majored in international relations. Because this stablecoin and digitization of the currency, this is not only about technology. This is about the country relations. and then like, the dominant of the power of the nations, right? Because I think the ideal is trying to put everything on the same layer of the network, including the currencies, including real estate, including the stocks and everything. But the reality is that even in this fiat world, we don't see that kind of the same capitalism happening on the earth. We have a different capitalism in a way, like US-centric, European-centric, and then Russia-centric and Chinese-centric. And there are a lot of hurdles to go over, even to move around the money. And I think that is the same thing as like moving. I think that's how it will be, in my opinion, in the end state. That like I agree that it's going to be all digitized, it's going to be tokenized, and which we're of course like pushing for. But the reality, we have to think about like each country, each nation has their own mandate to protect their own country's interest. So I think it's going to be very difficult to put every single person in the countries into the same agreement. Okay, we're going to use exact same network, that this is going to how it works. Which said, I think like in terms of digitization adoption, that has to happen because that's logically correct. But again, we don't know when. It's the same thing as like the Lehman shock was going to happen, but we didn't know exactly when. I think that's a similar feeling that I have.
And I mean, just how disruptive, looking ahead with no particular timeline, how disruptive are these technologies, whether it's the tokenization of financial assets or it's stable coins and the like, how disruptive are they truly going to be for the future of finance?
So I like what I think about these technology advancement. I feel like the word, instead of disruption, I think it's a natural law. So I look back like 1970s, 1980s, when the financial system and the financial services were extremely paper-based, and that became computerized through the computers coming in, like Bloomberg or MS-DOS. And I feel like the similar shift is happening right now from the computerized system to the on-chain system. So like I feel it's like a natural law because of the inevitable, because of the less risk, and it's good for everyone because of the less systemic risk potential. So it will happen as the whole financial industry will move into that whole system. So I think in a way it is true that we can say it's disruptive. At the same time, I feel like it's an inevitable natural law.
Okay, well, we'll see if that pans out. Because now, Yoshi, it is time for our round of rapid fire questions. Are you ready?
Sure, let's go.
You've got 90 seconds on the clock. Just one word answers is all I'm after, and we'll try and get through as many of them as we can in those 90 seconds. Okay, so I'm going to start the clock, and away we go. What fintech segment, in your view, has the biggest potential over the next 5 years?
Tokenization.
What is the biggest pain point in your financial life that you'd like to see resolved?
Cross-border KYC and cross-border money movements.
Are bank bosses ready for the AI revolution?
Yes.
Are customers ready?
Yes.
Have regulators in Europe and the US kept pace with all the new possibilities and behaviors we're seeing in the financial industry?
Not so.
Have you personally ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
Yes.
Are bank branches part of the future of finance?
Yes.
On a scale of 1 to 10, 10 the most likely, 1 the least likely, how would you rate the chances that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank between 1 and 10?
10.
That CBDCs, central bank digital currencies, will become a mainstream reality in the US or Europe?
5.
That you'll be able to open a crypto account at a top-tier bank?
10.
That SWIFT will still be the main tool for transferring money around the world?
2.
That a new card or non-card based rival will emerge to challenge Visa or MasterCard?
10.
And that we'll see a top-tier bank or insurer bought by a fintech?
10.
Excellent. As you can hear, you've managed to get through all of our questions because we are out of time for our round of rapid fire questions and sadly for our conversation. So I really just want to thank you, Yoshi Yokokawa, the co-founder and CEO of Alpaca, for joining me today. Thanks so much.
Thank you, Elliott. I appreciate this.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.